So you guys want to each say your name and, favorite ice cream or whatever? Go ahead.
I'm Lisa Edgar, and I love mint chocolate chip ice cream.
Good choice.
There you go. Lisa Edgar, Top Tier Capital Partners. We're a venture capital fund of funds located here in San Francisco. We invest in funds. We do secondaries, LP, and directs, and also co-investments.
Hey, my name is Chris Douvos, and I'm at the newly named Ahoy Capital. And I've been investing in venture funds since 2001 when I started my LP career at Princeton, and have done a lot of crazy fun stuff. I write a blog occasionally, although less frequently now, called Super LP, and the name Super LP comes not from any aggrandized vision of myself, but rather because I always wear red T-shirts when I'm out and about. And my buddy Du Chai once came up to me and goes, "What's with the red T-shirt? Is that your Super LP underoos?" And a nickname was born. And the funny thing about me, I guess, is when I was in college, I started a humor magazine with a couple of roommates that is still alive and actually rated the most popular humor mag at my college.
What's it called?
It's called Rumpus. Rumpus. And my first story was called Smut in the Stacks. And it was about, we had these, electronic records, like where you could punch in, they got rid of the card catalog. And one day I was sitting there and I was like, oh, I wonder if we have Playboy in the library. I mean, we have 18 million volumes in the Yale University Library. So I type in Playboy and the record comes up and it says, some issues may be mutilated and or stained. So
Did you really say that?
I wrote the whole article. I put the Orbis record in there. I interviewed the university librarian and she was, very apologetic about it, and she says, we try to keep everything pristine, and we've had to lock all the Playboys and Sports Illustrateds away.
All right. Everyone is reading homework, apparently.
I have to follow that.
Oh, and by the way, I might live tweet parts of this meeting.
Gosh, I got nothing on that. Anyway, so I'm Beezer with Sapphire Ventures, and we are a Palo Alto-based investment firm. We do both large, late-stage growth investing out of one of our funds, and then the second one that I manage along with some teammates that are here do LP investments in early stage venture funds, US, Europe, and Israel. I've been up and down different kinds of venture since last 20 plus years, both direct and indirect. And I can't think of anything funny after that story. I'll just go with my nickname, which is Beezer, which is odd.
And Beezer's my favorite person in the business, except for Lisa, maybe.
So that gets at this is a redo of last year's panel, and I want to get at something we talked about a little bit just before in the room before this, which is just the question of transparency. It's we were talking before. It's hard to see a lot of limited partners speak up. I know some of you guys want to see more of your fellow people in the industry doing things like this, being present, giving their perspectives. And we were talking before about kind of some of the power structures in Silicon Valley that prevent more people from doing these things. I'm just curious, why do you think so many folks on the LP side of the table are shy and reticent about, not you three obviously, but shy and reticent about speaking up publicly?
Well, the points that we were discussing backstage sort of covered a range, some of which is probably personal preference, to your point about, I don't think being on stage is what everyone's comfortable with. But also many institutions literally have rules against speaking publicly for the LPs because the focus of the entity might be a school or a pension or a hospital, and so it's not what they want. They want to talk about the business of what their firm does and not the investing engine.
Yeah, and I'd say a little bit that's changing because I think a lot of LPs have tried to help some of the newer GPs and new VC funds get started. So I think we do a lot more kind of roundtables and informal discussions, but I think people are afraid to talk to the press or talk anywhere where they could be quoted somewhere. I think that still there's a bit of a hesitancy there.
And one thing that I always think about is, in investing, you have principals and agents, right? And the principals think like investors and they're looking to maximize returns. But most people in the LP business are agents and they move around a lot
Can you define what you mean by agent?
Sure. So an agent is somebody who's in the middle of a transaction, right? So as an investment banker, you're an agent, right? And as an agent, you've got very different incentives. And this is, for those of you in the room thinking about raising funds, one of the things that's interesting is a bit of feedback I get from GPs is like, wow, I talked to person X or Y or Z and they were just a time waster or a window shopper. And there's some people who feel like their job is to take meetings, right? And their job is to get into the branded funds. They're not thinking in terms of how they can maximize their own returns because they've got another kind of set of objectives that they think are related to maximizing their returns but aren't. The other thing I'll say, the last thing I'll say is like every time I do a panel, I immediately get 612 emails. And so, you know, when time is scarce and you're getting bombarded by funds anyhow, like every time I tweet, I love tweeting and I love the community and it's awesome. But like on the flip side, like I've been bombarded by guys like chasing me with crypto stuff.
Yeah, but I think that the reason why it's relevant is I think because, you know, as you're talking about and, you know, in the introduction here, I mean, one of the challenges for people in this room and just for the entire industry is like, who are these people, right? These people have control purse strings. You know, it's unclear to tell, like, you know, what their interests are, what they want to talk about, what they're dissuaded by, and I think it's just an opportunity to just having more transparency kind of helps understand what it is you guys do all day.
I'm going to humble brag for Chris. So he and I were talking, I think it's like 3 years ago now, and Chris said, people want to know what LPs are saying. How do we let them in on the discussion? We should have a hashtag. And that's how OpenLP was born.
But giving credit where credit is due, it was Beezer's initiative and energy that got OpenLP up and running. So kudos to you.
Great.
So we're a team in different firms. And then Top Tier writes great blogs that we then retweet.
Absolutely.
I was going to say it is great because there's a few of us that contribute to it, and it really, you can get, you know, what's in the LP's head because people are curious about that. How, you know, how do we make our decisions? How do you get to the top of the pile? And that's what people ask all the time.
You know, it's interesting though, just as a quick aside, you know, I started blogging and I was like really blogging frequently in like 04, 05, 06. In fact, Josh Koppelman talked me into blogging. And Josh was then writing Red Eye VC. And Josh and I were having breakfast in the Conshohocken Marriott, which is a gruesome place. But we were sitting there in this horrible restaurant. And Josh said, look, Douvos, you should blog. I'm like, wow, I don't know if I have anything to say. He goes, well, look, you're probably of like average intelligence, but you're at least 20% funnier than most people, and that'll give you a voice. And I'm like, oh, hey, I think thanks.
So one of the key areas where, you know, I think transparency and, you know, LPs talking more would make a big impact or could have a ton of impact is on diversity. You know, obviously LPs are, you know, party to the partnership agreements. You have a ton of leverage if limited partners want to use it. There's been a lot of conversation in Silicon Valley. You know, this is a year ago this week was the first Harvey Weinstein allegations. A lot of talk about who has responsibility for the situation that we're in with diversity and harassment issues in particular. You know, you talk to some general partners and some activists and some CEOs who say, where are LPs? They're not at the forefront of this conversation, and they would argue this is an instance in which LPs being more quiet hurts the conversation. What do you guys think?
Well, I don't actually think LPs are quiet. I think, you know, all of us here on the panel are active and actually have a voice. And I'll just give a couple examples of some of the things that just happened in the last couple of weeks with me. You know, there's a biotech firm in the UK that I'm involved with. I'm on the advisory board. And you're always saying, you know, they're talking about hiring in the team, and you're saying, are you talking to women and other people, you know, of underrepresented, you know, minorities to be a potential investor at this firm? And, you know, we have these dialogues with them. Frankly, we've been having the dialogues even before the Me Too movement, but now that they're a little bit more vocal and a little bit more consistent. And they brought on 4 new investment partners, and 2 of them were women. You know, so, and I know it was a concerted effort, and it was conversations that it wasn't just me as an LP. And there's another one, it's a small fund in New York, and there's 2 individuals, and they'd love to hire a woman. They do a lot more deep tech and kind of infrastructure. And there was one particular woman they wanted to go after, and I know her, and I thought, well, that's going to be hard, but why don't you talk to her and ask her who else is in her network, who else she might recommend. And it wasn't like rocket science or something, but they were like, that was brilliant, because they weren't even sure how to approach her or what to say. And I said, well, just start the dialogue, because people have networks, right? And it's trying to get into these other networks. So I think the LPs have been a part of the conversation and dialogue and will continue to be.
Yeah. Chris, how much responsibility do you think LPs should have for diversity initiatives at funds?
As investors, as principals, right, we need to optimize discomfort, right? That's really the essence of investing. And my own kind of watchword, like when you ask what is it that unifies all of my managers, the phrase I use is I'm looking for robust nonconformists with the courage of their convictions, right? That's my footprint. And so it's interesting because I took Bob Schiller's economics class in college, and I remember I went to pick up my final exam, and Bob said, "Chris, do you like economics?" I said, "Why, yes, I do." He goes, "Oh, it's too bad." But anyhow, the reason I bring up Bob Schiller is because he actually did a class. It was like almost like a Freakonomics before Freakonomics. He did a whole class on ways in which people act against their own incentives. So he said, for instance, if you think about racism, like institutionalized racism, right? If there is something, a market failure that's causing people to not be hired, those people should lower their wage, and then employers could find a cheaper input and then prosper, right? And he had great data from like the sharecropping days and during the Reconstruction era and all this stuff. And he basically said, like, look, the South missed this huge opportunity because of institutionalized racism and so on and so forth. And I think about that a lot in terms of fun, because all I can do is back funds, right? And I can be a cheerleader, and and by the way, let me note that like, the LP world is much more represented. The women are much more represented. Maybe not underrepresented minorities, but women are much more represented in the LP world than in the GP world, I think. And in positions of great leadership, like Jane Mandela, one of the great kind of stars of the last era. Anyhow, so where I'm going with all that is like I'm looking for like inefficiencies, right? Where can you exploit an inefficiency? And if there are inefficiencies, which I believe there are in terms of specific markets with respect to underrepresented minorities or women or what have you, those should be arbitraged away, but they're not, because people don't think like principals, they think like agents. Right, and their job as agents is to get in. Like literally, I won't tell you what fund it is because it's a little bit embarrassing. But like, I remember somebody once called me from a big insurance company, and they're like, "Hey, what do you think of Fund X?" And they were like a fund that everybody in this room knows, and they're like the quintessential third quartile partners fund, right? And I'm like, well, they're an okay fund. Like, what do you want from those guys? Sorry for being long-winded, but I get like feisty about this. And they're like, well, it's my job to get into brand name funds. And like, we can't get into Sequoia, we can't get into Benchmark, we can't get into blah, blah, blah. And they literally like listed the 30 firms, like not the whole list, but literally like named a ton of firms that they couldn't get into. So this firm was the next best option. And I'm like, well, that stinks. That's no fun. And the guy's like, well, that's my job.
Yeah. So do you agree with that? I mean, you don't think that LPs have a tremendous responsibility on diversity issues because you think it's like, do you agree with this person who's?
Well,
yeah.
That person, I think they're going to have crappy results, but they're not empowered to find new things, right? And so I've been, I've been thinking like, who is it out there who's actually thinking? Now the reality is, at the end of the day, that you've got to seek the most outstanding risk-adjusted returns,
right?
Right.
And that's what an argument that some LPs make is, my job is to help pensioners and help university endowments, and if there's an all-male firm that's doing a great job on that, I'm not gonna, get kicked out of a fund because I'm banging against the door.
Right. And I think that's real. And I think part of the challenge is venture is so opaque, and people's evaluation frameworks tend to be very performance oriented, but performance is a lagging indicator, not a leading indicator. Right. And so people, and there's all this great new research that top quartile persistence is a lot lower than people think it is. And all this stuff, which basically like throws people's worldviews into, complete and utter confusion, but that's a whole nother story. But where I'm going with that is, I've distracted myself.
It's okay. I want to keep moving.
Yeah.
Beezer, are you guys doing anything differently than you were on diversity initiatives than you were maybe a year ago? Like if a manager walks in and says, "Hey, I want Sapphire to invest in my fund," are you guys asking any different questions, doing more diligence? Does the actual kind of has the last year of conversation on diversity issues kind of changed how you approach your job?
I don't know if they've changed so much of what we do, but I feel the ecosystem is different, and that changes the overall experience, right? So people tend to come forward with usually it's clear how much diversity is in the room when you look, right? So that's sort
not
of
hard.
kind of obvious, right? But then people will talk about it and they will say, if it's an all one gender team, oh, we're looking at doing X, Y, Z. So since the discussion is much more present, there's some questions that get answered before you ask. And I've also found, and the same thing with reference checks and just discussion. So we're looking at a fund where somebody rolled out with spin outs. It happens very frequently. And I called up somebody to say, hey, what do you know? The first thing out of their mouth was, hey, nothing is going on. This is a legitimate spin out, which is 5 years ago, Zippo. Like there would never been a discussion around like fraud or harassment. You'd have to ask questions. Right, and if you didn't word it in a particular way that got around an NDA, you might not have heard information. So, so now that's just really different in the ecosystem. Right.
So you think that there's both from the LP side of the table, there's maybe slightly more willingness to ask, but you think that GPs are sort of guessing the questions that you're going to be asking about diversity and trying to preempt them to a certain extent.
Seems to be the discussion.
Yeah.
Right? I think, because I do think the whole ecosystem is responsible for making itself a top performing ecosystem like anything else. I think it would be awesome if we could all say any one person could change everything overnight. I just don't think that's how the world works. So I think people are coming together to make it better. Look at the work that Allraise is doing. Right. Right, and in a multifaceted, like with LPs, with GPs, with CEOs, it takes that kind of ecosystem development to make change.
Either of you guys doing anything differently than a year ago on vetting or kind of investigating potential managers? Or is it pretty similar?
It's pretty similar.
Okay. You look like you had something you wanted to say.
You know, I manage money for a lot of endowments and foundations that are very far from here. Yep. So, you know, think Chicago, Cleveland, Florida, et cetera. And it's amazing to me, and what I love about them is that they're all very sophisticated folks. Like that's actually a rule for being in my fund because I don't have time for bullshit, which is why the funds I raise are smaller. I always say I don't want a larger, but I want a finer fund, right? And so what's interesting though is I talk to some people who you know kind of in the $1 billion to $5 billion endowment who have a venture portfolio, but they want another layer of depth or exposure to the small manager side or what have you. And I talk to people who should be my investors, which I think everybody should be my investor, but I think I talk to people and they're like, oh, no, we're good. We have a great on the ground perspective. I'm like, oh yeah? And they're like, yeah, we come out once a quarter. Mm-hmm. I'm like, okay, so you've been to a cuddle puddle. You've been to a party where people are, you know, where the employee of the venture firm it's their first day and they're, you know, a comely, you know, young lady and offers to walk you back to your hotel room. Like you've been to those parties. What do you mean? Right? Like, and so this behavior, or you see people, like I see people, there's a person I will not invest with in Palo Alto because I coached against them in Little League. And that sounds silly, but like the way people, you can't have like and this is why, by the way, look, we're investing in people's behavioral footprints, right? Like that's at the end of the day, what you're looking for is understanding who people are and what they're afraid of, how they value, you know, the different things they value. So long story short, like there's been a lot of stuff and I could go on and on for hours about this, but like the way people treat all their constituents, the way people treat their worst, the way people treat a constituent the worst is the way that you should expect them to treat people in a tough situation.
Let's talk about a couple more things. If this panel was a year ago, but if it were a year ago, there'd be a lot of conversation about crypto and kind of how LPs are reacting to it. It sort of died down. There's a story today that I have that, you know, Coinbase is raising at $8 billion, which I think will kind of reinvigorate a lot of the conversation around crypto and kind of what it means. But I feel like for the last year, there's been sort of a push, maybe a year and a half, there's been a push and pull between general partners and limited partners about what they should be allowed to do. Do you guys feel like that conversation, let's start with Lisa, has stopped? Do you think like we've reached a level ground where, you know, managers recognize, you know, we can do these deals and not those? Or do you feel like you're still sort of in debate with your managers about what they should be allowed to get away with?
Yeah, there was a big push for everybody to change the LPAs, and everybody wanted to be able to invest in digital assets, and is it 10% or 15%? And we went through. These are the
limited partner agreements.
Yeah, the LPAs, the limited partnership agreements, or some amendment or something. Everybody was all hot and bothered about it, and you're all going to get excited, and everybody's going to do it. And you look 1 year later, and regardless of what Bitcoin and Ethereum and stuff has done, the folks that were really experts and that they really had a thesis on this continue to invest. And some of those are going to work out, some of them I'm sure are not, but they've been fairly consistent in what they've done. Half those other people that made us do all those amendments and got us all worried, and
and it didn't end up doing anything.
Nothing's happening because it's just not in their wheelhouse, and they shouldn't be doing it anyway. It's an important tokenization is an important part of the structure of some companies, and it's kind of super interesting, I think. And we had this discussion last year, and I was more of a bull than you were on it, because I see more use cases, at least in the way I think about it. But it's still there, but to me it's died down, and it feels fairly reasonable, and people are getting smarter.
The level ground we have is where basically LPA has been modified, but not everyone's launched a separate crypto fund. Do you think it's like?
There's very few separate crypto funds, really. I mean, they're out there, and some of those hedge funds are now doing venture funds. And, I was just looking at some of the pricing, that the people invested in those hedge funds, they invested in the coins themselves, and they invested in companies, they had equity, and then tokens, and all kinds of stuff. And, like I said, some's up, some's down, but it feels relatively early days for it.
Yeah, Beezer.
I heard a stat yesterday, which this is an undocumented, unverified stat, so take it for what it's worth. There was 400 crypto funds, of which probably 380 were sub 100 million. And there was very few that had broken through, and then many of them had hedge fund structures, and they were all sort of sub 50 million. And I was sort of flabbergasted because I didn't realize there were that many. We don't look at hedge fund-like structures. But it seemed like there was a lot. But to Lisa's point, I'm not sure how much money is really going through them.
Yeah.
Right?
Do you feel like you're still in? I mean, is this something that comes up monthly or weekly? Some sort of debate with a fund about us wanting to invest in X, and oh no, my LP say I can't. Is that something that comes up, or is that very much a 2017 story that's died down, where there's conversation
I feel like
about?
Our world really bifurcated quickly into managers we had that were very thoughtful about the space and were doing it as part of their portfolio, in which case we've always been supportive.
Yeah.
And ones that sort of it showed up in the language because their entrepreneurs were doing it. I'm not entirely sure they were seeking.
So they were just reacting to
if
kind
you're
of
in the enterprise
what the CEO
space,
wants.
there was a lot of tokenization for utility purposes that were ramping, and everyone kind of got pulled along with it, versus folks who were doing more of a hedge fund currency trading.
Yeah.
Right. So we saw that more on these, since we do a fair amount of enterprise investing. We saw that.
I think one of the stories I'm personally fascinated by is just like if there will be examples of funds that in 2017 launched something ambitious and now have to kind of bring it back into the house. If anyone has any ideas, let me know. But have you guys seen anything on that?
It's interesting too, because I think what happened is there was so much, like if you think about the full flowering of crypto, it was almost like a daylily. Like it kind of came and went, like the hype cycle was so quick. And I think by the time people kind of got their footing, and got permission, they weren't able to execute. And the thing that was really interesting to me is I talk to GPs and sit on and sometimes it would come up in advisory boards that companies were raising a lot of money through coins, and you're like, but wait, how does that interact with the equity that you guys hold, and now how does that impact the capitalization structure? And while an entrepreneur has $1 and they're going to spend it, like that starts to really change the dynamics of these companies. And so the lawyers were really quick to kind of clamp down on that a little bit. But the number of times I had a conversation with a GP that ended with me saying, I guess I'm okay if you do that, but I will think less of you for having done it.
It's like something a parent tells their child, right?
Yeah,
It's like,
I've said that. Like, in fact, I've learned more about dealing with GPs now having teenage kids than I ever did before. I wish I'd had teenage kids when I was at Princeton in 2001.
Okay. Last thing is, yeah, I'm not gonna do the math on that. Last thing, let's just talk kind of just generally about the market. I originally was gonna ask a SoftBank question, but I'm sure you guys are bored of that from the previous panel. But let's just talk more generally about what SoftBank represents, which is companies staying private longer and how that affects your side of the table. Funds are nominally supposed to be 10 years. I'm assuming that what percent of those actually end up 10 years for you? A lot of hedge. 0%. Okay. How open are you guys to traditional ideas on fund structures? If someone came in and said, they want to pitch a fund that's not 10 years, or they wanted to, or you guys, I assume, do some LP, selling of your positions to other funds. We've seen examples like NEA, which is creating a kind of duplicate fund and then selling it to itself. I think there's a lot of probably healthy, interesting conversation about different ways to get at the problem. But like, how do you, the first question is, do you guys think this is a big problem, or is this just something that a few people are concerned about? And how open are you guys to innovative solutions from managers to address the fact that companies are staying private longer?
Yeah, it's here to stay, this late stage, stay private for a long time, all that capital. I mean, I don't know how that goes away, so we just have to live within it. The good news is, our old portfolios are finally, we have an IPO market finally, yay. And we're participating a lot. I think there was 40-some IPOs in the first half, and we actually participated in half of them, which was great because we're a fund of funds. So we get to do that. But it is something you definitely have to think about because it's not going away. And I said earlier, we're very active in the secondary market, so we are okay selling.
Yeah, do you want to explain what that would mean for an LP?
Yeah, so what we would do is, after 10, 12 years, their 10-year life plus 2, 12 years, all of us have a fund-to-fund structure in what we're doing, maybe not everything that Beezer's doing, but so we actually have a life in our funds too, and so we have to end these things. So at one
you have
point,
people counting on you.
Yeah. I mean, they expect to get their cash back at one point, so we'll sell into the secondary market, and we've done it a few times. We would be open to different structures or different thoughts on that, and we've seen a few, and but we have a construct ourselves that we have to live within. So
quickly, Beezer and Chris, I mean, how open are you guys to different ideas about ways to kind of get out of people's startup positions?
We're open to innovation. I think what I was thinking about when you were asking your question was really around what are the different return objectives of those different structures. And so since we invest in early stage funds, we're anticipating we're looking for a 3x net plus exit. And some of those structures you're talking about might have a slightly lower return, which is fine because they also have lower risk. So they just might not be attractive to us because the risk return profile isn't what we're looking for. But more opportunities to create exit potential in the market, generally speaking, is positive because regardless of how it becomes liquid, venture ecosystem demands liquidity, otherwise it just doesn't work. Employees don't want stock options if they aren't worth anything. They may as well just all be salaried, right? Like even if you're an endowment or a foundation, like the money needs at some point to cycle back in to meet the obligations, right?
Right.
So this whole system is structured on that, and if it comes through new alternative ways, that's fine. You just can't not ever happen. That doesn't make sense.
Yep.
Super quick because we're out of time. What I'll say is I don't think we'll ever really meaningfully see atypical structures because I think there's too much herd mentality, and I think unless there's a way for GPs to extract yet more value from LPs, we won't see any new structures. So there's just no incentive to innovate. What I hope that we start to see is that that's actually like a vaguely controversial statement, but nobody cares. What I think we'll see is what I hope we'll see is what we see in the buyout space, where we've seen a segmentation where people like exist in different niches in the market, and people who are micro cap buyout shops sell to the next guy and you have these sponsor to sponsor, like 45% of transactions are sponsor to sponsor. That's actually really interesting. So I hope, because at the end of the day, it's about moolah in the kula, right? Because if those dollars don't come back, like the number of LPs, I think the stories that's not written that actually nobody really cares about until they do, is that most LPs are so far out over their skis. Anybody who's got a mature portfolio is sitting on these crazy inflated NAVs, right? And by the way, this is a situation I was in at Princeton, and this is for another panel, back in 2001, and it was extremely painful when that blew off. And it basically took us out of the venture market for years. Right? And I think, I talk to people who are like 70% above their target, 80% above their target, and at some point the spigots get turned off and the money stops flowing into funds and into companies, and the circle of life halts.
Circle of life. All right, we got to wrap. All right, thanks guys, appreciate it.
Thank you guys.